And on that note, we're going to be quickly going ahead to our next session. Apologies, we'll have to begin right away as we're lacking time. So allow me an opportunity to once again re-invite our panelists on stage, starting with, of course, Arun Singh, Global Chief Economist at DNB, Vaibhav Sharma, Co-Head Subsidiary Banking, JP Morgan Chase Bank, Aniruddha Chatterjee, MD and CEO, NSE Cogensis, and Ravindra Singh, MD, SVC Bank. May we request, all right, we still have only the two of you. No, we do have our gentleman as well at the back. Please, if you can request all of you to please join us. Ladies and gentlemen, a warmer round of applause as we have Arun Singh, Vaibhav Sharma, Aniruddha Chatterjee, and Ravindra Singh. We'd now like to invite Pooja Bharwani, Executive Director, Deloitte South Asia, to please join us as the moderator. Since the introductions were done earlier, we're not going to be reintroducing. Apologies on that. Just want to save on time. And I'm sure, Pooja, you'll do a fabulous job in curating this session forward.
Yeah, good afternoon, everybody. So we are going to be addressing role of financial sector in Viksit Bharat, and very esteemed set of panelists. And for me, luckily, everybody from a very niche domain. So this panel is going to be very interesting. We have somebody from cooperative banking, we have somebody from data and analytics, we have economists, and then we have somebody from global banking, JP Morgan. So before I start getting their views, let me just lay the ground with some quick facts on Viksit Bharat, which I'm sure we're all aware, but it will help lay the foundation for a good conversation. So Viksit Bharat, there are a couple of key enablers that we all have heard about, right? Robust data-driven decision-making, we have global investments, we have technology integration, and we have a renewed focus on grassroots banking. We're witnessing a transformation today. Tons of fintech innovations, ESG compliant investments, deepening capital markets like we just heard, and digital inclusion. These are a few good things that we're hearing about and we're doing. What are some of the challenges that we're still facing today? Regulatory frameworks, credit accessibility, retail participation, and still bridging the rural-urban divide. And no matter how many conferences I go for, we keep hearing financial inclusion and MSME penetration. So those are some of the things we're still grappling with as an entire economy. Now, if you look at 2047, India is poised to become the third largest economy by 2047. We have a projected GDP of 7 to 8% growth. And for that, we will need a huge amount of financial infrastructure, both in terms of funding as well as good adoption of this infrastructure. Fintech ecosystem has grown a lot, but we still have financial inclusion with about 190 million adults being underbanked. So that's still a challenge we have to penetrate. India's stock market capitalization has grown significantly, but we're still seeing low retail investor penetration at only 7-8% when the developed markets are at about 50%. Huge bridge there we need to cross. Everybody has made claims that we need a lot of infrastructure, and we're looking at almost 1.4 trillion in infrastructure in terms of dollar financing to get where we need to be. And finally, sustainability, the key word today and going forward in the next decade, where we're going to be carbon neutral by 2070. That's the ambition. So with those couple of facts in terms of what we're focusing on as an economy, I'm going to get to our panelists. And let me start with Vaibhav. Vaibhav is subsidiary co-head banking at JP Morgan Chase. So Vaibhav, we've heard the kind of financing quantums we need. And we know that that is not only going to be domestically available going forward, we are going to have to tap into foreign funding. You being a global bank, how do you see your role shaping up? And how do you think global banks, such as yourself and global capital, can play a key role going forward to get to our vision?
Thank you so much, Pooja. Those who are confused with what subsidiary banking means, let me first explain that. It, in simple words, means any client headquartered outside of India doing business in India is what I manage the business. Coming to the question, $1.4 trillion is what you talked about. To get that kind of money, to generate those kind of resources in isolation in India by the private players in India or the government would not be possible. We do not have an option but to make our systems more attractive for the global capital to come in. And for the global capital to come in, the global bank, whether it's JP Morgan or any other bank, are going to play a critical role in facilitating the movement of those funds in a more strategic way, and also creating an environment which is conducive. We are the flag bearers for the country outside of the country. If you look at the banking landscape in India, majority of the multinational banks have had the history to be in India for about 100 odd years. We have deep understanding of the local regulations. We have very good connect in the country. We become the flag bearers for the country outside to attract the capital to come from abroad. We also bring in a lot of advocacy and the understanding of the other developed markets, right? So there is much better infrastructure there, both in terms of capital markets, the depth of capital market that you see in advanced countries. Just put some numbers, and these numbers is what we get from all four of yous.
Yes.
The bond to GDP ratio in India is 16%. For US, it's 44%.
Right.
That is the gap that we have to bridge. And that is where I see the global financial institutions, and not necessarily just the banks, playing a big, big role in facilitating the flow of this $1.4 trillion that we're talking about.
Great. No, thank you so much. And I think that's a very important point you make in terms of the deepening of the debt markets as well. So we're not only talking about foreign flows in terms of equity, but of course deepening the debt markets. Thank you for that. So I'll move to the other spectrum with SVC Bank. So you sit at the other spectrum. So while he's spoken about foreign flows, you're in a very unique position where you're an urban cooperative. But if you could talk about the role that cooperative banks are playing today in terms of getting the adequate amount of credit into the system, and how you see your role as an urban cooperative being slightly different there.
Yeah, thanks a lot, Pooja. I think if I understand your question has three parts. One is the role that we are playing as a cooperative bank at present. Then might be you spoke about bit challenges that how we are going to, and what are the way ahead for us.
Right.
I think. First of all, I'll just tell a brief about the cooperative banks in India. This moment started around 100 years back. We ourselves are 118 years old bank. Our bank was started in 1906 as a cooperative society, and these banks, cooperative banks, when they were started, at that time the banking services were not available to the common man. And generally people were in the clutches of money lenders. And to prevent them from those kind of hardships, some visionaries decided to open a cooperative kind of movement, and initially cooperative societies were started. This is the way we have started, and if we talk about UCBs, presently there are around 1,465 UCBs are there, out of which UCB means urban cooperative banks. We are urban cooperative banks, out of which 6 are tier 4 cooperative banks, means we are having deposits of more than 10,000 crore. These are large cooperative banks, and then there are category 3 cooperative banks between 1,000 to 10,000 crore deposits. Then there are around, I think, 80, 85, and then category 2, which are from 100 to 1,000, which are close to around 550. And then there are category 1 cooperative banks, which are pretty small and having deposits less than 100 crore. And they are large in numbers, close to around 780, 790, or might be 800 crore. And therefore the governance standards, the technology standards, and the constraints and various kind of issues also differ from the category to category, bank to bank also. Collectively, UCBs are having total business of close to around 9 lakh crore at present. And if we talk about total cooperative sector cooperative banking sector and cooperative credit sector in India, then there are 34 state cooperative banks at present, and then around 350 district cooperative banks. And then we are having, this cooperative sector is having more than 1,02,000 primary agriculture credit societies. And these are having more than 13.50 customers or members also, 13.50 crore members. So if we talk about size, it's around 20 lakh crore that we are having presently. It's very small in terms of amount, might be around 3.50% of the total banking sector. But if we talk about customers, then we cater to more than 11 crore customers we are having, at present accounts we are having. And if we add this primary agriculture society and all that, then it would be much more. So the role of cooperative banks in the financial inclusion has been going on since inception. And these are the societies, these are the institutions which understand the primary needs, small needs of the customers, and then have the tailor-made products, and this is how the cooperative sector has grown and cooperative sector has survived over the years. So we also are having, our balance sheet size is close to around 35,000 crore at present. We are third biggest cooperative banks of the country. And as far as challenges are concerned, as I said, it differs from category to category. And one challenge that is common to all of us is the constraints on the raising of capital. Unlike commercial banks, we cannot approach stock market, the shares cannot be listed, and we have to approach the members for issuance of shares, and that are at face value, which are not transferable. Loans also cannot be taken. And this is the biggest hindrance to the growth of cooperative banks, particularly large cooperative banks like us. Because we have growth aspirations, and that we have to compromise. Because other instruments like PNCPS and LTSP, they are also have their own limitations. I think the government is already doing something on that. They have already passed some bills, and some framework is to be created where the shares, there would be some platform and the shares would be tradable. If we talk about other constraints, other challenges, yes, there are certain very small banks where the challenges on technological advancements is also there. Because banking services today, whether it is private, public, or cooperative banks, they require to upgrade their IT and cyber security framework every year. And for that, heavy investment is required. Small banks have their own constraints in regard to that. Then there might be like manpower issues, whether they can pay to that extent and all that. Government is already alive to this kind of, and Mr. Honorable Minister has already said on many forums that cooperative movement is very important, and this will grow rather than coming down. And for that, in 2019, RBI approved this creation of NUCFDC, umbrella organization for this cooperative banks, and primarily for helping these kind of banks. So we have also, because looking at our responsibility, we also funded, we are also given our contribution in the form of capital to that umbrella organization. And this organization is primarily to create a kind of like common platform in terms of upgraded technology for the small banks. Then manpower management also, recruitment, training, those kind of things, and governance issues which are there, and to handhold them on this. So this has started working, and I think this will take care of major issues of that. As far as we are concerned in like large cooperative banks, we are already on Finacle at present also, and we were among the first banks to come on the core banking solution in 2002 with our own this core banking solution. And at one point of time, it was used by close to 90 cooperative banks. And then 2 years back, we decided to come back to this Finacle core banking solutions. So all digital offerings and everything is there. And I think this is very good opportunity for us to cater to and scale up our business also, and particularly in that direction. Government is already pushing the banks, particularly cooperative banks, in that direction. And that's why they have, RBI has asked the cooperative banks to limit their total loans to less than 1 crore, total 50% of the total loan book to less than 1 crore, and the priority sector advances should also be 75%, which would take care of all the financial inclusion and those kind of things. I hope I have answered.
Yes,
Thank you.
yes. Thank you. So I think despite some of the challenges that you mentioned that cooperative banks face in terms of capital infusion, in terms of getting updated with the tech advances that we're seeing, I think it's a fabulous job that is being done on ground in terms of grassroots banking and getting to all these customers that you mentioned. So, that was very good. I'll come to Arun. Arun is at Dun & Bradstreet and working with a lot of the data and analytics, which today form a very core part of what we do in terms of getting to the underserved segment. So, Arun, what kind of role are you seeing data and analytics play? And people have been using models and all. What more can people do with the data? Are you seeing financial institutions adapt well to data that is being offered through various platforms on DPI, and how can we better leverage it?
Thank you, Pooja, and thanks for bringing this point, and that's and thanks for bringing this point. I think we have a fact that financial sector is well developed in the market, and we know last 10 years when basically government put up the MMP program, financial inclusion was one of the #1 program, which basically had lots of digital adoption, and that's a fact. But the reality on the other side, if you look at some of the data, I looked at the World Bank data. Unfortunately, the loan penetration for the MSMEs is just 15%. It's 15% of the MSME have the loan, as against 45% for the rapid reformers. Rapid reformers, I mean to say Czech Republic, Croatia, Slovenia, Slovakia, Poland. Those countries basically both started their journey same time. 1991, India liberalized, and they basically got separated from the Russia. But look at penetration in the rapid reformers is 45%, but we have just 15%. But when I looked at the data inside it, what is the reason behind it? Unfortunately, what we found that loan rejection rate in India is 28%. So out of 100 applications put up by companies for the loan, 28% get rejected. That data for the rapid reformers is just 5%. So that's a problem. We reached out to the MSMEs, especially in market, a couple of years back, and pan-India, and we asked certain set of questions. And surprisingly, and most of you might be aware of, 1 in 3 MSME, they said, the collateral is the biggest hindrance to get the credit access. And similarly, 1 in 3 MSME said the credit score is another hindrance to get the credit access. And we all know account aggregators, I think open credit enablement network. There are good systems happening which will certainly help these underserved MSMEs and the rural enterprise to get good credit and certain things. And we are working around it. And other side, we talk about analytics, and we are involved and we are helping. We are talking to most of the companies, financial institutions, as well as the who need the borrowing. The analytics have a very, very big role to play here. I think use of non-traditional data is going to really help MSME, the underserved, who basically have not got any opportunity to part of the financial inclusion so far. And when you talk about the collateral as a big issue, I think this is going to help a lot, your OKIN and account aggregator and what you call basically, analytics. Now, non-traditional data, if you talk about GST use, I think there are some of the customers, some of the companies basically we have. You reach out to them as a company and put up your application for the loan. They don't need anything. They'll get your GST data, they'll get your income, they'll get a lot of other things, they'll basically provide the approval. They don't need, that's what basically happening. GST data, They certainly help to find out a financial compliance, your ability to repay, your utility bills, basically, which talks about your financial strength, your financial discipline, your trade data, and of course, more than that, basically, your social media data. Is there any reputation of the brand? Is there any negative linkages, or is there any, what basically the parent of the companies? Everything one can get from that pieces. You know, what we call the universal business linkages. Who is the ultimate parent? That's one thing. Now, I think more and more, what some of us at analytic level are using this satellite image data. And for the rural enterprise, that's very good. And that's when I talk about satellite image data. With that, with the light, with the image, we are able to find out what is the vitality of the particular area. Any company operating out of any particular city, what we look at? We look at the country GDP, we look at the city GDP, we look at state GDP. But if company operating out of a particular pin code area, this satellite will certainly give you what is vitality in that particular area. What is growth happening, what is industrial production happening. If a company operating out of any area, is certainly there is an economic activity happening or not. One can take a call without looking at the particular financial data of a company. Especially in the agriculture sector, we talk about vegetation index. That certainly talks about what is the crop pattern in the country. So any company belongs to the agriculture coming for particular loan, we know that they're going to be a good things. Or maybe there's otherwise, there's no crop, there's a damaged crop in particular area. You don't have to look at the what is the project profile, what is the basically growth of the company, what is the growth of the sector. No, data is available. It's abundant data is available. We have to basically just partner with those companies to get the meaningful insight and serve the underserved market. Thank you.
Thank you, Arun. That was the satellite I'd heard of, but it's a very powerful tool in terms of getting to the right credit. At the end of the day, all this is very useful for credit underwriting, and if you can do a good credit underwriting job and get, even if you better understand your existing customer, I think part of the journey is also understanding existing customer better, and part of the journey is to get to the underserved, which were never initially accessed. So thank you for those insights. I'll come to Anirudh. Anirudh, how, today when we are looking at the entire environment, we have the DPI, government is doing a lot, but how else can we strengthen this market infrastructure for financial institutions to absolutely leverage the technology we have?
Sure, thanks Pooja for the question. So I think Anand mentioned a very important thing, trust, right? I mean, I think as a market infrastructure provider, the biggest responsibility of the MIIs is to kind of how they ensure there is trust in the market, so he can bring the foreign investments safely, they will not have any questions, and of course we can create an environment which is safe for everybody. And if you break this trust down, in my view, there are 4 things that will stand up. The first thing, of course, is the robustness of your infrastructure. I believe that our infrastructure, particularly I'm talking about the market institutions, market infrastructure institutions, the infrastructure are quite robust. I mean, if you look at the #1 exchange in the country, they're also largest in the world in terms of derivative contracts traded. So I think the systems that we have built over a period of time in terms of the capacity to handle volumes of trade or transactions, we don't have a problem, right? The second point obviously is risk management. I mean, that's an evolving problem. I think Anand was very candid in terms of saying that, okay, fine, like they're always 2 steps behind the, the perpetrators of the crime in the market. It's evolving, but if you look at the recent history, there is no major accident that actually happened in the in the market that kind of broken the trust and ask people, no, I need to kind of really think twice before I put up my money, hard-earned money into the market. The third, of course, that comes is very, very important. That is your upstream and downstream connectivity, because market is not just about exchange or the broking entities or the mutual funds. Is how do you lay the connectivity between different organizations and ensure that the fund flows smoothly. Again, I think if you look at the innovation that is happening in the capital market space today is remarkable. We are not only talking about a seamless connectivity SCP, but we are also talking about T+0 settlements, which is, I think, one of the leading things happening in the country right now, or rather in the world. I'm not sure if any other world have actually started practicing T+0 settlement. So there's enough innovations happening in that area as well. And the last thing I would mention is the governance. And I think the way we have seen the regulations evolved and the kind of, the overall stakeholders involvement in terms of creating a kind of a very transparent governance structure that provides ample amount of confidence to the market participants that the Indian market infrastructures and the overall ecosystem that we have built around is safe, and people are trusting with their money and they're bringing those capitals back, without any fear in their mind.
No, thank you. And I think that the trust word is so important, that was mentioned earlier and that you mentioned, and there has to be this intricate linkage amongst various parties in the market for it to be seamless. So, thank you for that. I really want to get to, so, we all know that we've laid a great foundation, to try to get to our vision of 2047. But what I would like to, delve deeper on is what are the challenges today we're still facing to be able to get to that. So, Vaibhav, let's start with you. So, we know foreign capital needs to come in. We know we need to deepen our, credit markets, even with foreign flow. But what, if any, challenges are coming up in terms of people coming in with that kind of foreign capital that we actually need to, get in terms of our infrastructure financing gaps, our climate financing, we're huge gaps. So what will enable and what are the challenges that we're not seeing that kind of capital flowing in?
So, I would actually start with trust and the corporate governance and the financial reporting, but that's been talked about, so I'm parking that for the time being, right? So, for the country to grow consistently for next 22 years, we will need consistent flow of capital to come in, right? And therefore, whatever we do or talk about has to be more strategic and long-term. Capital to come in, there is a function of risk and reward. The fact that we are the largest, fastest growing large economy in the world and may remain like that for many years to come, the element of reward is already taken care of. What probably we need to work on with a concentrated effort is to manage the risk so that you reduce the risk and create that delta. And when we talk about risk, what risk are we talking about? If I were to oversimplify it, let's say 3 C's of risk, right? So you have the currency risk. I must admit that the central bank has managed to keep rupee volatility in a very range-bound manner, but that has happened because of the central bank's intervention. We need to start working towards making rupee more desirable for the world to make this risk come down to a level where it becomes more attractive for the foreign capital to come to. Number 2, the other C is the consistency. And when I say consistency, the consistency in policy. If the investors feel that there is a possibility of frequent changes to the tax regime, that reduces the trust and the confidence that they have in the country. And remember, we are talking about capital which has to come in for a longer tenure. We are not talking about liquid money, the liquidity which is going to come and may go back, but this is a long-term commitment to the country. And therefore, the consistency in terms of policy, the simplicity, the ability to understand and execute it in a simple manner is extremely critical. The third C is the country or the credit risk. And this, to my mind, is something that probably all of us, all financial institutions, the government need to work with a sense of urgency. BBB- is what India's sovereign rating is. With BBB-, we are placed behind other South Asian countries like Philippines, Thailand, Malaysia. We are talking about China +1 strategy. We are talking about diversification of the supply chain. China is A+ with a huge capacity on exports, right? we are probably put in the bucket where you see countries like Greece. So this is one area where I think all financial institutions and the government of the day has to work with a sense of urgency, to work with the rating agencies, to fix the structural issues with the balance sheet, such that we become more attractive on a more sustained basis for the world capital to start flowing into the country.
No, thank you. I like the 3 Cs. I think I'm going to use that somewhere.
Yeah, it is.
No, but I think
I'm
I
taking
think
it from
it's
Mr. Modi.
so no. So I think that's a very good insight. I think we do need a lot of all that in terms of consistency and all to basically get that confidence in the market, and to your point, on a long tenor basis, right? So just going back to the challenges that we're facing. Arun, from a data standpoint, right? So now we have all this data, and we've heard people talk about risk now, and AI biases, model biases. So what are the real challenges you're seeing with all this proliferation of data all of a sudden, and how do financial institutions manage that risk better?
So, thanks, Pooja. And if I look at today, almost 2/3 of the global population now have internet access. Just 3 decades back, we had almost zero. So look at the journey we have covered. Almost 2/3 of the global population internet access means too much of data, abundant data. Every financial, every digital footprint is basically leaving, the data. And who's basically creating us, the financial institutions, research organizations, the individual, and everyone basically creating a data. And if I have to basically look at the data and the amount of data we have created today, if I have to store everything in a disk, you remember that disk we used to have a CD. If I have to store the CD and stack one on other, it will reach moon 9 times. That's the data we are basically generating, and financial institutions. And what we do with this data, if you leave this data vulnerable, of course you are exposed to lots of risk. The fraud, you're basically loss, and probably it's not just loss, fine, or reputational risk. There is a risk that you might go out of business. That's the risk we're carrying. So I think what we do when we talk to our customer, when we're dealing with some of the customer, and what we basically get to know, and we advise them, there are certain things basically they need to do. The first thing is basically educate your employees. I think they are the first line of defense. They need to know what's the fraud happening, what's the basically things happening, what are the model happening, what are the basically various, the penetration or maybe what you call the data leakages happening. They need to be educated. They need to be basically trained. That's one thing. And the second thing is basically you need to understand what about communication, encrypted communication basically. When you communicate, your communication has to be secure enough. I talk about VPN, SSL, WPA2, everything has to be working in sync to ensure that your communication is basically encrypted or secure. That's one thing. The third thing is that basically research your supply chain. You need to understand basically your supply chain, what type of data fraud happened, data issues happened, and how they dealt with in the past. Strict data security has to be basically implemented within each and every organization. An employee has to be understanding, employee should know what is basically framework to report any suspected issue or suspected data breach or suspected data loss. They need to basically report. And the last point, I think you need to ask your partners all the tough questions, because your data, how they are keeping your data secure, safe. These are certain things basically we talk, and then the customer who basically take care of that piece is the safe and secure. Because I think data breach in a world of AI we're talking about is getting leaked. And that's the security they need to create in front of them in order to have a really insightful and meaningful insight from the data. Otherwise, it's just lost to their reputation. Thank you.
Thank you. I think, yes, the question is, when is too much data too much, right? And how do we dissect it and get to exactly what we're looking for? Just going to SVC Bank, in terms of the challenges, I know you mentioned a few in terms of digital adoption and capital raise. My question is, how how do cooperative banks today, going forward, look to positioning themselves, in this world of digital banks, small finance banks, uh, so every other banking channel that's there, how do we uniquely position cooperative banks going forward?
Yeah, thanks a lot. I think, as I said, the bigger cooperative banks are just like the other commercial banks of the country in terms of technology and other digital offerings also. Like I said, we were among the first one to introduce this core banking solution in 2002, long back, with our homegrown solution, and now we are on Finacle, for example. Banks like us are having DMS also, our own mobile banking app also, internet banking app also, eNACH also, then online digital DMS, this DMAT account opening and trading and all those kind of facilities are already there. And this is a journey actually for every bank, whether it is cooperative bank or any other bank. It's a continuous journey because every year you have to upgrade yourself. Every year you have to invest heavily, and it's not an expenditure, it is an investment, be it cyber security, be it IT upgradation. For example, in our case, there are various projects going on at present. We are further upgrading our mobile banking app also. We are further upgrading our internet banking apps also. Then LOS is also online and this going on. Then online account opening, this video KYC, and there is various projects that are in line, and most probably in the next 3 months to 1 year they are coming. So because if we have to remain relevant and we have to remain in market, this has to be done every year, and this is going on for us also, the other bigger banks also. And for for smaller banks, like as I said, category 1, where the deposit base is less than 100 crore, those kind of things, there might be constraints. And yes, you see this NU CFDC is a very positive thing. Again, I am mentioning it because this is they are going to be a game changer for those kind of banks. They are going to have provide a platform on pay-per-use basis, also, whether it is for data collection, data management, whether it is for other kind of IT offerings that are going to happen. So this is, I believe that bigger cooperative banks like us, 6 banks, they are up to date with the market, with the competition also, and that's why we are growing in that way. Yes, but it is a journey, as I said again. It's a journey, and every year we have to invest in that.
Thank you. And then, finally, Anirudh, in terms of the challenges, that you're seeing that you need to overcome in your space, I think if you could highlight some of that.
Sure. So I think, look, as a company, we are a subsidiary of NSE, and we, our primary job essentially is to provide data informations to the market so that they can take more informed decisions. So our job, in a very simple word, we connect the dot. So some of the challenges which are being faced by the industry today is that the data is fragmented. You don't get everything. Vaibhav mentioned about debt market data. Now, if you really have to invest wisely in the debt market today, I think the biggest challenge is that you don't even understand most information about the issue, the issuer, and the risk involved, the covenants, everything else, right? But everything is not so dark. There are positive things happening, and they're happening at a very, fast pace. I think the market is also now started implementing and experimenting with blockchain, different other emerging technologies. I'm sure that many of you would know that the DPs now, they have using a kind of a blockchain-enabled platform to completely manage the life cycle of an issue. So right from making the ISIN to managing the ISIN and the covenants or maybe the charges, everything is being done on a blockchain platform. So that's a very positive directions. Again, Anand talked about IPOs, and I think the amount of capital we need to raise going forward. I think just about 2 days back, SEBI announced that they are now experimenting with an AI-enabled platform, which is going to make 1,000 IPOs possible in a day. I think those are the kind of innovations which are actually happening parallelly. The last bit I would mention, which is of course a challenge in terms of growing the inclusion of the financial market, in particular the capital market, is the education. Education both about the opportunity that lies in front of you and the risk that you're taking on. There are a lot of initiatives being taken in that particular case. In fact, one quick mention that I would do here is that if you look at the instance of the investment protection fund, that's a very innovative concept that we have in the capital market today. Like all the penalties being paid by the market institutions today, that goes in the IPF, right? And that's a very wise way to mobilize the fund and also utilize the fund for something which is eventually going and make the market much more stronger and wiser in terms of bringing the capital in. I think that's how I would say.
I think your challenge is well interwove into a lot of positives. so it's a good note to sort of take their closing remarks. I've been told we need to wrap up the panel from a time perspective, but I'll just go to each of you, and if you can just share one, from your space, one actionable insight that you see in the next 5 years that one can take in the industry to sort of, 2047 is a long time away. What is that one actionable, that you would like to see taking shape in your space?
So thank you. I think I just said about there is abundant opportunity available in the market, underserved, and you have basically the serving categories, and there's a gap. And the gap is basically can be filled with the technology, your analytics and data. Find out where the gap and reach out to your unserved, untouched, companies. Because I said we have just 15% of a company got a loan, and they need 100%. We're talking about 50%. So immediately, I think the 15% has to become a 25% in next 5 years, which means you need to leverage on the existing technology, data, analytics to target them. Thank you.
And it's always difficult to sit next to an economist and make sense. But if there is one thing that I were to pick amongst many, and there are many, is that for the sustained growth to happen, the physical infrastructure has to precede anything else, which is where I believe that the government will have to have a continuous effort. But at the same time, there has to be a strategy to open doors for the private players to start developing phygital database, phygital infrastructure, right? Which will, you have the AI and the robotics, which are energy-hungry fields which are coming up. You have the greening of the supply chains. These are the areas which are likely to generate higher returns. There has to be concerted effort from the government, from the private parties to develop these areas and bring in more capital for the country to continue to grow.
Thank you.
Yeah, that's a difficult one, honestly, because there's so many things that you really need to do, and if you have to be part of this entire development process. In my view, look, there's going to be challenges in the road ahead that we have. We do not know whether dollar will dominate or not. We do not know what's going to happen between US and China. We do not know whether BRIC will actually become a reality or not. In midst of all of that, as a market institution provider, as a data provider, I think we have our roles cut up. I think our priority would be essentially is to kind of connect these different dots and see that how we can make sense out of all of this.
No, he has his last comment and then we'll...
No, because abhi ho gaya. Otherwise, no, they will have a late lunch. Why sir, bataiye. Yes.
I think still I'll
reply.
reply.
Earlier session, thoda time, I brought it within the time.
See,
Let us finish with him. Yes.
my reply to you is that Viksit Bharat campaign is going on for last many years, and I'm happy that we are a big beneficiary of that. If the solar power has grown from 2 gigawatt to 97 gigawatt in the last 10 years, we have funded to small extent to rooftop and all that. So whether it is MSME or women entrepreneur or whatever, everywhere we are having opportunity going forward. Thank you.
Cooperative sector is with our Jamsha, and they are doing a lot of business. Total technology. Strengthen like it. Yeah.
Okay, thank you so much.
Thank you so much. Well, with that, may we request the felicitation?
Puja first. Of course. Mr. Bhatt, then Bhatt, come.
So, ladies and gentlemen, do not go anywhere, as on the other side we have our next upcoming panel discussion. Allow me a moment and opportunity to introduce so that we can buy more time for them. It is going to be our next conversation. We're looking at empowering future leaders, igniting change, and the positive impact. For our moderator, we have Dr. Asha Bhandarkar, Advisor, HR, T-Hub, former Dean and Distinguished Professor, Org Behavior, IMI Delhi, an author, researcher, Senior Fulbright Fellow, Public Speaker, Development Coach, Psychologist with a PhD in Business Administration, Osmania University, Hyderabad, India. An independent director on the PNB board and director on the board of IMT Ghaziabad. We also have the resource person and our panelist, Dr. Ambuj Gupta, Higher Education Leader, Management Consulting. The domain of work includes improving effectiveness of educational institutions, helping them navigate challenges related to leadership, policy administration, and academic programming. We also have Mr. Amitabh Singh, Head Business HR, ICICI Home Finance, joining us. In this capacity, somebody who's responsible for leading and managing the human resources functions that directly support the business operations of the company.